Aloha and welcome to Java. Thank you kindly for joining me. Today is Tuesday, it's July 30th, 2024. I've got quite a bit going on in the markets and also elsewhere. A lot to talk about. So let's start right in with the markets as they will affect everybody and kind of filter down into your life. So starting with our risk indicators right now, the MMRI 271. Still relatively stable. There was a lot of volatility in the markets yesterday. They did head into the green territory as the probability showed us it would. So the fear greed index for stocks right now, neutral, still a lot of greed and buying into this. We'll go into that in a moment. But the 10-year yield and relative strength of the dollar uh, gained a bit of strength, causing some chop and volatility. So range bound yesterday was a tough day for a lot of people trading within that. There weren't a lot of reports. We were kind of expecting that. I did follow the probabilities basically and was a little more positive than not. So we've got cryptocurrencies also pulled back as we suspected because they were hitting that resistance zone. So they've still got a little further. They could go down. We're going to discuss a bit more about that because there's quite a bit behind those at the moment. So fear greed index for cryptocurrencies right now strongly in greed territory. So we've got the stock market a bit mixed right now, and the futures basically looking towards green. So we've got the sentiment is not much confidence prior to our getting consumer confidence report today. They'll likely report it better than what they're expecting. Will be volatile, but the uptrend still favored slightly in these probabilities. So urging caution if you are looking at shorting this market. May not be the right time yet. So we've got investors rushing into junk corporate bonds as Fed rate cut speculation goes wild. Why would they do this? Okay, junk corporate bonds are exactly what they say. They're basically low-grade notes to corporations or for commercial real estate, whatever it might be, that is high risk of possibly not being paid back. So in order to get people to loan to them, banks or corporations as it is, they have to increase the amount of people would get in return for loaning them that money. So high yield, you get a high return. However, there is higher risk along with that. So they are paying for you to take that risk. So we've got a high yield credit ETF looking at incredible monthly inflows. So this is because basically they believe that when the Fed Reserve cuts rates, they won't be able to get the same return on their money. However, I think markets are going to experience major jump as soon as they do announce actual cutting of those rates. So for today, prior to market open, we're getting home price index. At 10 a.m., we're getting consumer confidence numbers. And the important one is job openings because that is what the Federal Reserve now is going to be using as one of their gauges that they're looking forward to. We've also got prior to market open tomorrow, ADP employment and the employment cost index. So those very significant reports, and not just the numbers themselves, but as we've spoken before, how the sentiment is towards that, whether it's quote unquote expected or not. So how that reporting goes around what the actual numbers are will move the markets. So we've got major earnings continuing. We've got MasterCard, these are all prior to market open in the morning. Notably, we've got Boeing, SoFi, and AMD, chip space, and a lot of larger ones. So going into the mega caps, we've got two that we've got some stories with. The first, Tesla recalling over 1.8 million vehicles over concerns of unlatched hood opening. So this is different because it is an actual physical recall of the vehicles. I think this is going to hit them a bit. However, still bullish on Tesla long term. I don't think the market has priced in a few things they've got coming forward. Secondary, Nvidia. So chips are in a very interesting spot at the moment. They're still in a resistance territory. However, they've got some things moving forward. So with this, let's go into a little bit more of what's going on. Bond market, or the debt market, treasuries sounding an alarm that may signal stock market crash, but coming with a silver lining is basically if you position yourself properly, you could really profit from what is about to happen. Now, the debt market is much larger than the stock market. This is all of the debt around it. And this is large portion could be triggered even by Fed rate cuts themselves. But along with this, they're speaking about the US markets. But the Bank of Japan is having issues with their rates as well. We're about to watch them probably experience the beginnings of a hyperinflation or superinflation because it's beginning to hit their citizens. And they're talking about increasing the wages. And this is always kind of a cyclical, self feeding loop that would cause the currency to really collapse, for lack of better terms. So, with this, we're also watching slower decline in the Western currencies. Bank of Japan will cause the first one with the yen, will be one of the first quote unquote Western currencies. They're loosely tied in. We've also got the euro and US dollar beginning to have issues as well. Now, half of the middle class in the United States are cutting out contributions to their retirement funds. Now, this hurts on two sides. The first is because it's cutting back on savings and what Americans are going to have come retirement time. Secondly, retirement and pension funds are two of the largest drivers and purchasers in the stock market. So this is quote unquote large money, as well as insurance, which is also facing major headwinds due to a lot of the destruction that is going on currently. There's massive amounts of wildfires going on, and they're going to have to cover a lot of this and the flooding issues, as well as tornadoes. So, with all of this coming in, we've been talking about catastrophe bonds, and that's basically a major play that a lot of these funds are switching to. So, with this, we've also got 4.3 million people hit in another data breach. So, names, addresses, social security numbers exposed. You're going to have to protect yourself from these things. So, going back to cryptocurrencies, we've got the United States moving $2 billion Silk Road Bitcoin basically onto exchange. Normally, this is done when you're about to sell it, just as Germany did. Now, there's major difference because this also was confiscated money from the US government, but they still own $12 billion in Bitcoin that they have confiscated from others. So they could sell 2 billion, bolster their back end, so to speak, and then still continue to hold quite a bit. So with this caused Bitcoin to dip 4.5%. But as we were saying, it was at a resistance level. Still bullish long term. I think it's going to come down. If it comes down 62, 63,000 is a good opportunity I'm going to take to buy the dip. You can do what you want, not financial advice. So we've got the current nominee coming into this, as well as the other one is RFK Jr., supporting Bitcoin, saying only Bitcoin can guarantee the US dollar's reserve currency status. Well, you have to back it with commodities. And I agree with the sentiment, could also be gold, which central bank is also supposed to be holding. So we've literally got all presidential nominees except for one that backs cryptocurrency. And we've got the largest super PAC now outpacing some of the others called Fairshake. It's a cryptocurrency one, and somebody's getting left out. So that party, the Democratic Party, now is basically urging their candidate to be a little more friendly and hopefully speak at the upcoming cryptocurrency conference. It's called Permissionless. On this event, it's a very large one. because this particular candidate missed out on the Bitcoin conference. So, with all of this, what they're speaking about is addressing the US national debt. It has now surpassed $35 trillion. So, this is giving a big boost to the cryptocurrencies because they're now seen as safe haven, which is a huge advancement over just the past 2 years alone. So we've got Warren Buffett, his company Berkshire, trimming positions, second largest stock. They're doing a lot of insider selling a lot of Bank of America in particular, as well as some other stocks. So a lot of insiders selling, the smart money pulling back and going to cash positions, priming themselves for what's about to happen. Okay, so a couple other stock specific news. We've got Amazon Prime undercutting Netflix on their advertisements for Prime Video. So this competition, I've spoken about Amazon before. They took a bit of a hit yesterday, but they are conglomerating much more, not just video streaming, their sales platform, but they have the largest back-end business called Amazon Web Services for businesses that is now being used. Will also tie in their being very quiet on the artificial intelligence front, but they've got their own. So with all of this together, I see a larger move with Amazon coming in, even larger than probably Meta, who's also doing a lot of things in that back end. Okay, so with this, moving over to Delta now, really CrowdStrike. They're the first one that's starting to come up. They're going to start the lawsuits. So CrowdStrike, not buy the dip yet. See how all of this shakes out. I expect more to come. Delta is just the first, possibly the largest, but definitely more to come. So with this, moving out to the global scale, moving out a bit larger, we've got world trade seeing the calm before the tariff storm. So I think it's a few things that will be affecting this. Demand will be down, shipping prices going up, inflation, all of these forces coming in at about the same time. And then we've got the political moves about tariffs. So with this is going to have a definite effect on the global economy, the trade wars. So with this, we're seeing an instance here, South Korea tapping US trade deal to prevent chip spats with Japan. So both of them trying to basically repair trade with the largest purchaser, which is the United States, to the Western world as a gateway. We've got United States also backing early extension of a trade pact with Africa. And this is because Africa is now migrating off more to the BRICS platform. So losing Africa as a trade partner for some of the larger things is a huge hit to basically supply chains as well as other deals that will be seen a little bit later on. And it's being very quiet in the news, if it's even reported at all in mainstream media. So jumping over to Europe, we've got the Euro area GDP growth rate. They're saying it's beating estimates. Basically, they notably left out Germany. Germany still in decline for the production. And then we've got a major warning they've issued to the diplomats to slash spending. Will they do it? We don't know. They're speaking about severe austerity measures. They're pulling back from several of their global offices and the growth because their spending has been too much now. One country that has done this effectively at the moment is Argentina. So they can look to that for an example. A lot more volatility coming forward. My announcement is that I'm going to be here as much as I can the next couple of days. My timing might be off, but I will be in Discord. I believe I will have access to that. So if you can, in the link, join Discord, the main chat, so you can keep up with us. And I will also be on here as much as possible. So with that, wish you all a wonderful trading day. And until I see you again, my friends, stay free.